Welcome to the Ontario Mortgage and Real Estate Insights podcast, your go-to source for the latest developments, trends, and regulatory changes in the industry. I'm your host. I'm Sandy, your guest host from Keller Williams Legacies, here to provide you with insights sourced from reputable news outlets to help you stay informed.
Steve Hamoen here. This is brought to you by Real Approved Inc., a trusted mortgage brokerage dedicated to helping Canadians achieve their homeownership dreams. Visit realapproved.ca to learn more about how our experienced team can assist you with your mortgage needs. Let's dive into today's episode. All right, Sandy, let's kick things off with some concerning news from Toronto. According to the Canada Mortgage and Housing Corporation, Toronto is on track for its lowest annual housing starts in 30 years. This is primarily due to a 60% year-over-year decrease in condo starts. What do you think is driving this downturn?
Well, Steve, it seems like a combination of factors. The report mentioned a pullback in investor demand, which has made many projects less feasible, leading to cancellations and delays. This has really impacted the construction pace. Reduced investor interest can often be attributed to economic uncertainties and rising construction costs, which many in the industry are hoping will be addressed with lower construction costs and development charges.
Exactly, Sandy. The report also highlights that record low pre-construction sales have contributed to the slump, making this the lowest construction level since 2009 or 1996 when adjusted for population. It's a stark reminder of how sensitive the market is to economic shifts.
That's right, Steve. And it's not just condos. Rental apartment starts have also decreased by 8% compared to the same period last year, although they remain above their 10-year average. This downturn in construction is a concern because condos have been a significant source of rental housing in the region.
The report warns that this construction slowdown could put further pressure on affordability in the long term. Once economic conditions improve and demand picks up, the lack of new housing could become a significant issue for Toronto's housing market.
Absolutely, Steve. It's vital to maintain a steady and growing stream of rental construction, especially in a city like Toronto, where demand for housing is consistently high. The industry needs to find a balance between addressing current challenges and preparing for future demand. So, Steve, let's talk about the mortgage renewal wave that's set to test Canadian borrowers as rates begin to ease. It looks like about 1.8 million mortgages are up for renewal over the next year.
That's right, Sandy. With the Bank of Canada's rate-cutting cycle pausing, a lot of attention is on how borrowers will manage higher payments after enjoying years of historically low rates. Those who locked in 5-year fixed rates during the lows of 2020 and 2021 are particularly vulnerable. According to research from the Bank of Canada, these borrowers could see their payments jump by around 20%.
It's definitely a significant change for many homeowners. However, industry experts are suggesting that the risk of widespread distress might not be as severe as it sounds. Robert Kavcic, a senior economist at BMO, mentioned that most borrowers have been stress tested at 5.25%, and with real incomes continuing to rise, the impact may be manageable. What do you think, Steve?
I think Kavcic makes a good point, Sandy. With mortgage rates around the 4% mark and many borrowers proactively working with their lenders, there are ways to mitigate the impact. Lenders are also adapting by providing more flexible solutions like extended amortizations and early renewal options. It's all about being prepared and taking advantage of these options.
Absolutely, Steve. Leah Zlatkin, a licensed broker and expert at lowestrates.ca, emphasizes the importance of advanced planning. Homeowners should start planning 4 to 6 months before their renewal date. This includes modeling worst-case scenarios, evaluating cash flow impacts, and gathering necessary documentation early.
That's solid advice, Sandy. By calculating what payments might look like if rates were to increase by 15 to 20%, homeowners can better understand the potential impact on their budget. This proactive approach can really help in reducing the shock when the renewal letter arrives.
And it's not just about the individual homeowner, Steve. The broader Canadian economy is also facing challenges, like persistent job market softness and fiscal uncertainty. The unemployment rate is expected to peak at 7.3% by the end of the year. However, the Bank of Canada's expected rate cuts through spring 2026 could ease some pressure on borrowers.
Definitely, Sandy. While the economic landscape is a bit uncertain, it's encouraging to see that there are measures in place to help borrowers navigate these changes. It's important for everyone involved to stay informed and make well-prepared decisions as we move forward. Sandy, it seems like the landscape of the Greater Toronto Area real estate market is shifting dramatically. The latest data from WAHI shows that 98% of neighborhoods are seeing homes sell for under the asking price. This is a significant increase from 95% in July and 89% a year ago. What do you make of this trend?
It's a pretty stark change, Steve. Just a few years ago, bidding wars were the norm. Now, with nearly all Toronto neighborhoods experiencing underbidding, it reflects a broader market slowdown. Ryan McLaughlin, an economist at WAHI, suggests that demand is dwindling for condos due to factors like a soft labor market, slowing immigration, and economic uncertainties.
Right, and it seems like the condo market is particularly hard hit. McLaughlin also mentioned that while low-rise homes do not have the same supply surplus, the issues in the condo market are starting to spill over. It's interesting to see how interconnected these segments are.
Absolutely, Steve. The data shows that 94% of neighborhoods with single-family home sales are underbid, which is slightly less than the 97% for condos. This might be partly due to realtors listing low to attract more attention, but it also indicates that sellers are overestimating the market value of their homes.
That's a good point, Sandy. It's worth noting that almost 80% of homes sold in August went for less than their listed price. This rise in underbidding aligns with the Toronto Regional Real Estate Board's data, showing a continuous drop in average home prices for 7 consecutive months.
Yes, and Andrew Harold from condos.ca and property.ca highlighted that the strategy of setting an offer night is not working as effectively as before. Unless a property is quite rare, most are selling under asking. This trend is particularly pronounced in the condo market where there are many unsold units under $1 million.
Harold also pointed out that sellers who purchased before 2020 are more realistic about sale prices. Those who bought in the last 4 to 5 years, especially with upcoming mortgage renewals, are the ones feeling pressured to hold out for higher prices, which might not be feasible in the current market.
It's a challenging situation, Steve. The upcoming interest rate announcement by the Bank of Canada could impact the market further, especially since the condo market is sensitive to rate changes. If the rates are cut, it might ease some pressure, but it's hard to predict exactly how much of a shift we'll see.
Indeed, Sandy. The interconnectedness of economic factors with real estate is complex. It's crucial for both buyers and sellers to stay informed and prepared as these developments unfold. The market is clearly in a state of flux, and careful navigation is key. Sandy, there's been a recent survey revealing that a majority of Canadians are calling for tougher action on mortgage fraud. The survey, conducted by Polaris Strategic Insights for Mortgage Professionals Canada and the Mortgage and Title Insurance Industry Association of Canada, found that 78% of respondents agree mortgage fraud creates an unfair playing field, while 64% said it inflates housing prices. What are your thoughts on this?
It's definitely a pressing issue, Steve. When people feel that the housing market is being manipulated, it can lead to a lack of trust. And when you add in the fact that many believe it contributes to rising housing costs, it's no wonder there's a call for action. Lauren Vandenberg, President and Chief Executive Officer of Mortgage Professionals Canada, mentioned that income verification through the Canada Revenue Agency could be a practical solution. It seems like a step in the right direction to reinforce trust in the market.
I agree, Sandy. It's interesting to note that the survey found regional differences, with 80% of Ontarians most concerned about mortgage fraud's impact on fair access to housing. Rising interest rates and affordability challenges have only compounded these concerns. But despite these worries, there has been a decrease in mortgage fraud rates from 0.46% in the fourth quarter of 2023 to 0.19% in the fourth quarter of 2024, according to Equifax Canada's report. However, fraudulent financial documents still account for more than 90% of cases.
That's a good point, Steve. The decline in fraud rates is promising, but the persistence of fraudulent documents is a significant hurdle. The survey also highlighted strong support for a Canada Revenue Agency-enabled income verification tool, with 72% of Canadians backing the idea. Rob Boudoir, President and Board Chair of the Mortgage and Title Insurance Industry Association of Canada, emphasized the need for this tool to protect against fraud and stabilize housing costs.
It's clear that many Canadians see this as a necessary step. Currently, income verification involves multiple steps, which, while effective, are time-consuming and vulnerable to fraud. A centralized verification tool could streamline the process and reduce risks. The government did commit to consulting with the mortgage industry on developing such a tool in Budget 2024, and there was strong support for a real-time, secure digital solution during consultations. However, as of now, there's no update on its progress.
Exactly, Steve. The delay in implementing this tool is concerning, especially when there's a clear demand for it. It's crucial for the government and industry to work together to bring it to fruition. The potential benefits in terms of reducing fraud and restoring trust in the housing market are significant. Let's hope we see some movement on this soon.
Sandy, let's dive into the recent developments in East Gwillimbury's real estate market. According to the Toronto Regional Real Estate Board, the average home price surged by 10.4% in August 2025, reaching $1.22 million. This is quite a jump from July, although it's still down 4% from the previous year. What do you think is driving this price increase?
Well, Steve, it seems like East Gwillimbury is experiencing a bit of a market rebound. The increase could be attributed to a combination of factors, including a rise in buyer confidence and a limited supply of homes. With 35 home sales and 211 active listings at the end of August, it's clear that demand is heating up, even if it's not quite at last year's level.
Absolutely, Sandy. It's interesting to see that detached houses in the area have experienced a 15.6% increase month over month, averaging $1.37 million. This suggests that larger properties might be in higher demand, possibly due to families looking for more space. However, not all segments are seeing the same growth, are they?
That's right, Steve. While detached homes are doing well, semi-detached and attached houses are facing declines. Semi-detached homes averaged $968,500, down 7.4% month over month, and attached houses averaged $818,813, down 4.9%. This could indicate a shift in buyer preferences or possibly a reflection of the current economic uncertainties.
It seems like the market dynamics are quite varied. The fact that detached homes have increased in value both month over month and year over year suggests a strong interest in these types of properties. Meanwhile, the decline in semi-detached and attached homes could be due to oversupply or a lack of buyer interest.
Exactly, Steve. It's crucial for potential buyers and investors to understand these nuances. The market's not uniform, and different property types are reacting differently to economic pressures and buyer demand. It's also worth noting that compared to August 2015, the average sale price for all houses and condos in East Gwillimbury has increased by 100.5%. That's a substantial long-term gain, which might be attracting more attention to the area.
That's a significant increase, Sandy, and it highlights the long-term growth potential of real estate in East Gwillimbury. For investors, these numbers could be appealing, especially if the trend continues. However, with economic uncertainties still looming, it's important to remain cautious and informed.
Absolutely, Steve. As always, staying informed and understanding the local market conditions is key for making sound investment decisions. It will be interesting to see how these trends evolve in the coming months, especially with the broader economic factors at play. Let's delve into the latest insights from the Canada Mortgage and Housing Corporation's Fall 2025 Housing Supply Report. This report highlights some significant trends across Canada's key housing markets, offering a detailed look into how housing starts and market dynamics are evolving across the country.
That's right, Sandy. The report paints a picture of a housing market that's stable on the surface but reveals significant regional disparities upon closer examination. For instance, while housing starts in Calgary and Edmonton have been robust, Toronto and Vancouver are experiencing notable slowdowns.
Indeed, Steve. Calgary and Edmonton have seen strong growth in housing starts, particularly in new rental apartments and ground-oriented homes like single-detached and semi-detached houses. This is largely due to lower home ownership costs and strong demand in these areas.
On the flip side, Toronto's housing starts have fallen to their lowest per capita level since 1996. The high costs and reduced buyer demand are major factors here, as are economic uncertainties that are making buyers more cautious.
Exactly, Steve. In Vancouver and Halifax, we're also seeing declines in housing starts, though there's hope for a gradual recovery in Vancouver due to ongoing housing demand. Halifax, however, is facing construction delays and rising costs, which are complicating project completions.
The report also highlights a shift from condominium construction to purpose-built rentals. This change is driven by strong demand for rentals and government financing programs that make these projects more attractive to developers.
Yes, and this shift is significant because it reflects a broader trend where developers are responding to market demands. With fewer buyers moving up the property ladder and weak pre-sales, it's no surprise that condo starts have declined across most major markets.
Builders are facing numerous challenges, such as high construction costs and tariff-related disruptions. These factors, combined with slower population growth, are adding uncertainty to the housing market. Yet, Calgary and Edmonton remain resilient, indicating regional strengths despite these hurdles.
It's a complex landscape, Steve. While the report anticipates a slow and marginal rebound by 2027, progress will vary significantly by region. Understanding these nuances is crucial for anyone involved in real estate, whether they're buyers, sellers, or investors.
Absolutely, Sandy. This underscores the importance of staying informed and adaptable in a market that's clearly in flux. Thanks for tuning in to another episode of the Ontario Mortgage and Real Estate Insights podcast. We hope you found today's insights valuable as you navigate the world of mortgages and real estate.
Before you go, a quick reminder, Real Approved is here to make your mortgage journey smoother. Whether you're buying your first home or refinancing, their experienced team is ready to guide you with personalized support every step of the way. Visit realapproved.ca to get started and take the next step toward achieving your homeownership goals. Catch you next time and stay informed with the latest industry insights.